Welcome, everyone. Could I have your attention, please? At this time, I'd like to ask Mr. Trent Yates to come up here and offer a word of prayer for the meeting.
It's good to be with all of you this afternoon, and if you would, please bow your heads and we'll offer a prayer. Lord, as we celebrate the Easter season, we thank you for your Son, Jesus Christ, who sacrificed himself for us, that through his death and our belief in him, we may know eternal life. We thank you for our First Bank and Trust Company and for the blessings you have showered upon us. We ask that you continue to lead the officers, employees, and directors of the bank to make competent, sound decisions that our company may continue to thrive. Lastly, we pray for our country, ask your blessings upon our nation, and your guidance in all that we do. Amen.
Thank you, Trent. Welcome, everyone. We gather here this evening to discuss another year of work, give a long list of numbers, rankings, and projections that solidify why this bank is one of the best banks in the state and also one of the best banks in the nation. I'd like to thank all shareholders, both present and streaming, for their continued support and faith in this company. We also celebrate the 458 employees that go to work each day and give 110% at putting our customers first. Their hard work and dedication are what the following numbers and graphs are built from. On behalf of the board, I'd like to thank each and every employee of this company for another successful year. At this time, we would call the meeting to order and call for nominations for election of chairman. Thank you. Any other nominations? All in favor? Any opposed? This time we'll ask for nominations for secretary to serve the meeting.
Mr. Chairman, I nominate Trent Yates to be secretary because he's the right to do it.
All right. All right. Motion made and seconded. Any other nominations? All in favor? Any opposed? All right. This time I'd ask for Mr. Trent Yates to come forward and give proof of notice for the meeting.
To the shareholders of First Bancorp, Inc., notice of 2025 annual meeting dated March 12, 2025. Notice is hereby given that the 2025 annual meeting of shareholders of First Bancorp, Inc., the company, will be held at the Southwest Virginia Higher Education Center located at 1 Partnership Circle, Abingdon, Virginia, 24210, and via live stream at 6 p.m. on Monday, April 21st, 2025. Please visit www.firstbank.com to view the live stream. The purpose of the meeting is to consider and act upon proposals to: 1, to elect 3 Class B directors to serve until the annual meeting of shareholders in 2028, and 2, to transact such other business as may properly come before the meeting. Only those shareholders of record as of the close of business on March 12, 2025 shall be entitled to vote on matters presented at the meeting or any adjournments thereof. To assure that your shares are represented at the annual meeting, even if you plan to attend, please complete, sign, and date the enclosed proxy and return it promptly in the enclosed self-addressed prepaid postage envelope. Your proxy is revocable at any time prior to its exercise. The annual report to shareholders will be available online March 21st, 2025 at www.firstbank.com by order of the Board of Directors and signed W. Mark Nelson, President, Chief Executive Officer.
Thank you, Trent. Do I have a motion to accept the notice? Okay. All right, motion made and seconded. All in favor? Any opposed? All right. This time I'd like to ask Mr. Trent Yates to read the minutes of last year's stockholder meeting.
Annual Stockholders Meeting of First Bancorp, Inc., April 15, 2024. The annual meeting of the shareholders of First Bancorp, Inc. was held at the Southwest Virginia Higher Education Center in Abingdon, Virginia, at 6 p.m. on Monday, April 15, 2024. This annual meeting was called and conducted in accordance with the bylaws of First Bancorp, Inc. of Lebanon, Virginia. David A. Leonard welcomed the shareholders that were in attendance, including those shareholders viewing the live stream meeting, and provided his opening remarks to shareholders. He then proceeded to call for nominations for the election of a chairperson for the meeting. A motion was made by Mark Nelson and seconded by Ronald Barrett that Dave Leonard be elected as chairman for the meeting. Mr. Leonard was duly elected chairman of the meeting by acclamation. The chairman then called for nominations for secretary. A motion was made by Raleigh Hyder that Sophie Chafin Vance serve as secretary for the meeting. The motion was seconded by Ronald Barrett, and there being no further nominations, Ms. Chafin Vance was duly elected secretary of the meeting by acclamation. The chairman then requested that the secretary present proof of the official notice of the meeting, whereupon Secretary Chafin Vance responded by reading the notice sent to all shareholders. A motion was then made by William Hyder that the shareholders approve the notice complying with First Bancorp, Inc.'s bylaws. The motion was duly seconded by Ronald Barrett II and unanimously carried by all present. The chairman then requested that the secretary read the minutes of last year's stockholder meeting. Secretary Chafin Vance responded by reading the minutes, whereupon a motion was made by Mark Nelson, seconded by Ronald Barrett, that the minutes be approved as read. The motion was unanimously carried. The chairman then requested that a canvassing committee composed of Eric Moore, Monica Anderson, and Samantha Mitchell be established to determine the number of shares represented at the meeting by proxy or in person. The chairman provided his comments to shareholders and then called on Senior Vice President and Chief Credit Officer Raleigh Hyder to provide an update of the overall company credits and his goals for 2024. At the conclusion of the credit report, Raleigh Hyder called upon Chief Financial Officer A. Eric Moore to provide the prior year financial update, whereupon a full and complete financial statement was presented and a detailed comparison was made of the bank's performance for the years of 2019 through 2023. Following Mr. Moore's comments, President and Chief Executive Officer W. Mark Nelson presented to the shareholders an overview of the company's activities for the previous year and his vision for the future. The chairman then requested that the canvassing committee report its numbers to determine if a quorum is present, whereupon the shares were tallied, with Mr. Moore reporting that there were 5,962,816 shares represented at the meeting out of 8,298,616 total shares outstanding. Of those, 3,579,518 shares were represented by proxy or mail, and 2,383,298 shares were represented in person, giving a total representation of 71.85% shares outstanding. Chairman Leonard then declared that a quorum was present and the meeting duly in session. Chairman Leonard then explained that in accordance with Title IV of the Articles of Incorporation, stockholders shall vote to elect directors for a 3-year staggered term. Directors are designated as Class A, B, or C director. It was noted that 3 Class A directors' terms had expired in 2024, and therefore requests for nominations to fill the vacancies were sought. Whereupon a motion was made by Raleigh Hyder that Class A directors David Leonard, W. Mark Nelson, and N. Trent Yates be reelected to serve an additional 3-year term until 2027. The motion was duly seconded by Ronald Barrett, and Dave Leonard, W. Mark Nelson, and N. Trent Yates were duly reelected to the First Bancorp, Inc. Board of Directors. Chairman Leonard called for a motion to fix the number of directors to serve for First Bancorp, Inc. Upon motion made by William Hyder, seconded by Ronald Barrett II, and duly carried, the number of directors was fixed to 9. Chairman Leonard then asked if there was any additional business to be brought before the meeting. David Leonard II responded by making a motion that the acts of directors and officers be approved for the past year. The motion was duly seconded by Ronald Barrett II and unanimously carried. Chairman Leonard made his closing remarks and announced that the Board of Directors approved a 1-for-1 stock split to shareholders of record as of May 31st, 2024. Chairman Leonard then asked all directors elected to meet immediately following the adjournment of the meeting for a reorganizational meeting. There being no further business to be brought before the meeting, a motion was made by William Hyder, seconded by Dave Leonard II, and duly carried to adjourn the meeting. Mr. Chairman.
Thank you, Trent. Do I have a motion to approve the minutes? Motion made and seconded. All in favor? Any opposed? At this point, I'd like to appoint a canvassing committee to determine the number of shares represented so we can establish a quorum. This committee would be made up of Mr. Eric Moore, Monica Anderson, and Jody Maney. At this time, I'd ask for a warm welcome and introduce Senior Vice President and Chief Credit Officer, Mr. Raleigh Hyder.
Thank you, Mr. Chairman. Good evening, shareholders, board members, and colleagues. My name is Raleigh Hyder, and it's an honor to speak with you tonight, providing an update on our bank's credit portfolio and performance over the previous year. In addition, I want to take some time to address our lending plans for the future and the accompanying strategy as we continue to strive for performance to ensure the long-term goal of remaining an independent company. As Chief Credit Officer, my role is to ensure that our credit practices are sound, our risk exposure is well managed, and we continue to support our customers in a way that contributes to the mutual financial stability and long-term success of our bank and its clients. First, I'd like to take a moment to highlight our commitment to prudent credit risk management. Over the year, we have worked tirelessly to enhance our underwriting process, improve portfolio diversification, and adopt more advanced risk management tools. We have strengthened our credit policies to ensure that we are lending responsibly and balancing growth with the need for caution in uncertain economic environments. As you know, our loan portfolio is one of the bank's most significant assets from an accounting perspective, but the success and profitability that we currently enjoy are derived from a fundamental truth, that this bank's foundation, current standing, and future opportunities are born from the loyalty and commitment of our shareholders, customers, and staff. In 2024, we grew outstanding loans from $2.9 billion to $3.2 billion, an increase in the net of $364.8 million. Our growth has and will continue to be deliberate, focused on high-quality borrowers with strong creditworthiness and character. This careful approach has allowed us to maintain a healthy level of the non-performing loans to capital ratio, otherwise known as the Texas ratio, where we ended the year with a ratio of 2.66%, compared to peer bank and national averages of 4.23% and 6.52% respectively. In line with our commitment to risk management, we have also enhanced our loan reporting to provide us with day-by-day insights into our portfolio's performance, helping us to respond to potential risks proactively. During the year, we continued to focus on building a quality loan portfolio that is diversified within our major lending segments, such as commercial lending, agricultural lending, and consumer mortgages through our mortgage division. Within our bank's commercial lending loan portfolio, we continue to remain cognizant of our current exposure in commercial real estate. We have historically avoided large commercial projects in metro markets due to the reputations for large swings in demand and value. In turn, we will continue to focus on quality projects that have strong individual partnership and are in locations that have more economic stability, such as college towns and localities that have a growing industrial base. As far as agricultural lending is concerned, we will continue to source out good opportunities to finance production agriculture and real estate. In addition, we offer our agricultural clients something unique from a banking perspective, a one-stop institution to handle all of their banking needs. We pride ourselves in being a generational bank. From originating a loan to purchase a grandparent's longtime farm, which offers an opportunity for retirement, to assisting those same grandparents with investment advice to plan for retirement through an advantageous tax strategy. We will bank the parents and the grandchildren as well. We will offer guidance to young farmers to help them anticipate a challenging commodity price environment, while providing technological solutions to make sure we are operating at the speed they need to make decisive decisions. It is our desire to be generational partners through the cultivation of relationships built on trust. Now, in terms of our loan portfolio, it remains fundamentally sound, even in the face of evolving market conditions. As of the close of the year, our non-performing assets to total loan ratio remains well below the industry average at 0.33%, or just 33 basis points, reflecting strong performance and proactive credit monitoring. Delinquencies remain low in commercial real estate asset classes and across our growing geographies. Now, there will always be problem situations that need to be worked through, and if we do so quickly and effectively, they can be limited. In any regard, our loan loss reserves are fully funded and aligned with both our internal risk models and regulatory expectations. At the end of the year, our reserve represented 1.27% of total loans. Over the past year, we have taken deliberate steps to fortify our credit practices, including developing more stringent underwriting guidelines for specific industry types and stress testing those loans that have the largest capital implications. In addition, our credit review process remains rigorous. Reviewed loans in 2024 represented almost 1/3 of the total loan portfolio. We reviewed over 40% in commercial real estate and agricultural loans, where we continue to assess not only individual borrower strength, but also broader sector trends. Now, we can analyze the numbers, but at the heart of our loan portfolio is the underlying credit culture cultivated over time. A strong credit culture isn't just about avoiding losses. It's about building trust, enabling growth, and ensuring long-term financial stability. Mark Nelson alluded to the key to our success in our annual report, and that's our outstanding customer service. We can offer the best technology, the best loan products, the best deposit rates in banking, but without the ability to deliver these in a way that benefits our customers, it's worthless. So what makes our products superior? What enables us to perform in a way that exceeds our peers in almost every metric? It's the employee that brings these products to market, with the expectation that they are selling a relationship and not just a transaction. Beyond customer service, the most important aspect of what we do is time. Are we providing a solution that allows our customers or potential customers to make a decision in an expedient manner? I would say that we do, but we cannot lose sight that this can always be improved. Internally, are we selecting software and process solutions that provide the customer value and speed up the customer decision-making process? Or are we just creating more steps to accomplish the ultimate goal of customer satisfaction? These are important questions we need to consider as we continue to grow. The last thing I want to touch on this evening is our lending strategy moving forward and some key takeaways. Our loan portfolio remains stable and strong. Stability is not just about the numbers, it's about the relationship. We take pride in lending responsibly, knowing our customers personally, and understanding the unique needs of the individuals, families, and small businesses that rely on us. Our strong credit culture is built around accountability, local knowledge, and long-term thinking. As we look into 2025, we remain cautiously optimistic. We are always mindful of economic headwinds. We are confident in the strength of our portfolio, the determination of our lending staff, and quality of our borrowers. Our portfolio remains well diversified among different asset classes and well distributed geographically. Our ability to provide top-notch customer service will continue to allow us to maintain the desired return on the loans that we make, as net interest margin will continue to be a priority. Our bank's direct exposure to the current tariff situation is limited, and the current economic outlook is unknown. However, there is one thing that I do know, and that our bank has and will continue to act in good faith for our clients and our shareholders. We have done this time after time, and this situation is no different. Lastly, our commitment is clear: to preserve the safety and soundness of our bank while supporting the people and the businesses that make our community thrive. I want to thank each of you for your continued trust and support. As always, we value your partnership, and I look forward to sharing with you many more years of the bank's lending success. At this time, I want to introduce Eric Moore, our CFO, to give his comments. Let's give Eric a hand. Thank you. It's up there.
Thank you, Raleigh. Good evening, everyone. My name is Eric Moore, and I'm the Chief Financial Officer for First Bancorp Incorporated and the subsidiary First Bank and Trust Company. And it's my pleasure to share with you, our shareholders, the financial performance of the company over the past year. Raleigh mentioned in his presentation that our long-term goal is to remain an independent company. But I'm reminded often that the right to remain an independent company is one that must be earned by consistently performing at a high level. As I highlight the 2024 full-year results for you, I think you will see that that standard of performance has been maintained yet again. For the year, the bank produced total interest income of $219 million, with interest expense of $93.4 million, resulting in a net interest income of $125.6 million. When we talk about net interest margin, and you're going to hear a lot of talk about margin tonight. Raleigh's already talked about it, and I dare say that you'll hear Mark talk about it as well. But what we're talking about is the difference between the interest that we earn from loans less the amount of interest that we pay to our depositors, which is the source of everything we are able to do. And while I'm discussing the margin, I want to dive a little bit deeper into the interest expense for 2024. When first considering my remarks for this evening, I looked at that $93 million of interest expense, and the thought did occur to me that our CFO must not have done a very good job controlling cost of funding last year. But I think it's important to remember where these funds go. Virtually all of our deposits come from our local customers in market areas. So this $93 million was paid to them, to individuals in this room, those watching online, as well as our other customers. So think about that for a minute. We return $93 million to our customers, to the individuals and businesses in our markets. That's a lot of money. Our cost of funds, the average we pay on deposits, was higher than most of our peer banks. So we pay significantly more to our customers than most banks. Yet we are still able to achieve our net interest margin targets because we're disciplined on the lending side in regards to yield. Of course, paying more attractive rates on deposits than our peers obviously is a factor in being able to consistently grow core deposits. Now, to be clear, we do want to grow our lower cost deposits, primarily non-interest-bearing checking accounts. So if you're a shareholder and you don't maintain your personal or your business checking account with First Bank and Trust Company, I'd ask you to consider to do so. Checking accounts are a significant factor in controlling our cost of funds and strengthening our net interest margin. In 2024, we continued to maintain a robust provision for loan losses, adding $4.4 million to the reserve during the year. As Raleigh mentioned, our reserve stood at 1.27% of our loans outstanding at the end of the year, sufficient to weather the credit challenges that may arise. The bank produced other income of $20.4 million. Other income would be that revenue which is not of the interest variety. For example, loan fees, gains on sale of loans, income from our trust and wealth management division, and other transactional type fees. Other expense for the year was $72.6 million, with the largest component by far being the salaries and benefits that we pay to our 458 employees. In 2024, this amounted to 59% of our total non-interest expense. The bank's efficiency ratio, a key measure of operating efficiency, which measures other expense to income, was 49.7% in 2024, which is about 10 to 15 percentage points better than that of typical financial institutions. And after paying $13.5 million in income taxes, our net income for the year stood at $55.5 million, a $5.3 million increase over the prior year, representing growth of 10.6%. Based on our shares outstanding, this equated to an earnings per share of $3.34, a 32-cent increase from the $3.02 earned in 2023. Our book value per share grew 12% to $21.40 at the end of 2024. And the bank paid out $1.19 in dividends per share, which represented a 10 cents per share increase over the prior year. The dividend growth of 9% marked the 34th consecutive year that the dividend has been increased. In total, the company paid out $19.8 million to shareholders in 2024. At the beginning of each year, the management of the bank establishes financial goals that we hope to achieve. These goals are always ambitious, but in 2024, we were able to exceed every significant goal that we had set. Loan growth was targeted at $275 million, but our actual growth exceeded $365 million, growing at 12.7%, and at the end of the year, total loans outstanding totaled $3.2 billion. Deposits were also budgeted with a $275 million increase, and this goal was eclipsed by nearly $195 million, coming in at $470 million increase, with $3.4 billion in total deposits at the end of 2024. Our capital growth projections were also exceeded, with capital growing at 11.7%, totaling $37.3 million, some $3.5 million over our goal of $33.8 million. Total capital as of December 31st, 2024, amounted to $355.4 million. The goal for total assets included growth of $309 million, but the actual results produced over $500 million in asset growth during the year, with the ending asset total being $3.82 billion. An increase of $2.4 million was targeted for net income for the year, but this goal was more than doubled, with the actual increase coming in at $5.3 million, producing a total net income of $55.5 million for the year. This represents a 10.6% increase over 2023 income of 50.1%. The momentum we gained in 2024 has carried over into the current year, as demonstrated by our interim financial results through the first quarter of 2025. Total assets were over $3.9 billion at March 31st, 2025, and compares very favorably to where we were a year ago at $3.4 billion. Total deposits at the end of March were just under $3.5 billion, up over $500 million year over year. Total loans are approaching $3.3 billion, up 11.1% from the first quarter of 2024, and total equity has grown nearly $40 million year over year, standing at $365 million at March 31st, 2025. Through the first quarter, net income came in just under $15 million at $14,962,000, which represents a 25.6% jump over the first 3 months of 2024. As I prepared for this meeting, I spoke with a lot of different shareholders about any concerns they had in regards to the bank. The questions I received were all similar in nature: concern about political and economic uncertainties, and how things like tariffs, rate changes, or even a possible recession could impact the performance of the bank going forward. As I mentioned earlier, maintaining our net interest margin is how we ensure the bank remains profitable and performs at a high level. And I'll tell you, this is my favorite slide of my presentation because it's remarkable how steady we've been able to hold our margin over the past 5 years. If you look at the charts, the red line is the net interest margin, the blue line is the Fed funds rate, and the gray line is the inflation levels over that time. If you recall, there were some pretty unprecedented events that happened in 2020 and 2021, but our margin remained rock solid, even with the Fed funds rate approaching 0%. Coming out of the pandemic era, rapidly rising inflation took its toll on the economy, approaching double digits. Again, through this inflationary period, the margin remained resilient. In an effort to counter inflation, the Federal Reserve enacted a series of Fed funds rate increases beginning in 2022 and continuing on into 2023. As you can see from the graph, the net interest margin remains stable. The point I'm making is that we don't know what will happen, and neither is anyone else. But if we maintain margin discipline, we will be able to successfully navigate through almost any challenge. So, how do you maintain a consistent, steady net interest rate margin? By having an unrelenting focus on rate discipline in both lending and deposit operations, maintaining the overall loan yield while not sacrificing credit quality, and managing the cost of funding to achieve the desired margin. Specific strategies, including variable rate loans and shorter loan maturities, coupled with deposit strategies to leverage both variable and fixed rate term deposits, ensure that we'll be equipped to maintain the margin in an up or in a down rate scenario. As we look ahead to the remainder of 2025 and beyond, we will strive to sustain the net interest margin, producing earnings growth that will continue to bolster our already strong capital position. We will continue to grow our core deposit base in the markets we serve, providing ample liquidity reserves to weather any unforeseen circumstances that sooner or later will probably come our way. And we will continue to manage our operations in a cost-effective manner, maximizing our efficiency. And lastly, we will continue to invest in the products and technology provided and serviced by motivated and dedicated employees to ensure that our customers receive the absolute best banking experience possible. Thank you for your time. Thank you for being an investor in First Bancorp Incorporated. At this point, it's my pleasure to introduce the President and Chief Executive Officer of First Bancorp Incorporated and the First Bank and Trust Company. Please join me in welcoming Mark Nelson.
Thank you. Thank you, Eric. Let's give a big round of applause to Eric, Raleigh, Trent, and Chairman Barrett for all of the information they provided so far tonight. You know, I've always believed that dreams come true if you work hard enough, and that's what Raleigh and Eric and all the 458 employees of our company do every day. I'd also like to thank David Matlock and the Southwest Virginia Higher Education Center. This is the 10th time that we've had our annual meeting here in this building. And they always do a great job with us. The technology is super, and I know the broadcast out will be great with the technology that's here. So thank you to David Matlock. Also tonight, a young lady who put her heart and soul into her company, Ladybug Catering. She did a great job with the food tonight. And for all those people, thank you. For all those people that aren't here tonight, if you ever come to Abingdon, hopefully she'll open back up her store one day and you'll be able to go in there and get something to take home. But she does a great job. She's worked so hard to make her dreams come true. I'd also like to thank all the shareholders that are present here tonight or that are listening to us on the live stream for your loyal investment in our company and the financial business that you've allowed us to earn. And we'll talk more about your financial business as we move along through this. As we celebrate all of the information that was provided, all the great results, far better than we ever anticipated, as Eric talked about, it would have never happened without the 458 employees that are all represented on this slide. Every single name of every person that works for our company is represented here. So let's give them a big round of applause. We must continue to utilize our momentum that's created by these 458 employees to set our sights on the promising horizon before us. According to recent industry reports, the commercial banking industry employs over 2 million individuals. First Bank and Trust employs 458 of those bankers in our company alone. Our employees make a difference every day. We expect our employees to learn and grow with our organization by remaining actively, and I mean actively, and dedicated to our vision, our core values, and our overall mission. First Bank and Trust Company attracts, retains, and recruits world-class employees as part of the ongoing succession plan. As the bank continues to grow, our employees will have the opportunity for both personal and professional growth. And what is really remarkable, if you look at the number of employees that we had, we have only increased a net of 5 employees with the growth that we had in 2024. So I dare say to you, there's not another bank out there that can talk about growing $500 million with 5 net new employees. But all of our employees get to take part in not only getting a paycheck, but being able to own a part of our company. And many of them are with us here tonight. But every employee can enhance his or her retirement through First Bank and Trust Company's employee stock ownership and savings plan. The ESOP plan, independently valued company stock, has produced a return of 77.92% over the past 10 years. Talk to any of the people that have retired in the last few years, and they will tell you what making that investment in the ESOP plan has done for their retirements. As of April 15, 2025, 98.5% of our employees participate in the ESOP plan, with only 7 employees that are eligible but not participating, another record for our company. The plan currently holds about 456,656 shares, or 2.75% of the shares outstanding. Our employees are not just workers, they're owners of this company, and that has made a positive influence over the years to our overall shareholder return. As we venture into new markets, we expand our existing markets, and we build our digital bank, opportunities will continue to be created for those interested in pursuing a professional career at First Bank and Trust Company. We look to build our candidate pools and strategically align skills and talents with job functions, and enhanced our human resource department to include recruiting. It's very difficult to find individuals who want to be hired to retire, which is what we want to do. First Bank and Trust Company will continue to promote educational excellence through training and collaboration opportunities that will further enhance employee skill sets and proficiency levels. Enhanced leadership development programs, such as the internship program, which I am really proud that has worked, and the young lady who runs that for us has done a great job. And the Young Bankers Management Team, which is a great group of young people who collaborate together, who can do things that I can't even think about yet. So that group is big for us. But the one that I really am most proud of is the mentoring program. The fact that we have individuals who will take their time to work with the individuals they hire to mentor them to be the banker that they were or could be. And so the mentor program is huge for our company, and it's going to help us to continue to develop strong leaders and provide the best ongoing succession plan that any bank could have. But all of our employees, the 458, are all super important to us, but there has to be someone to lead them. And we have, in my opinion, a world-class executive staff, and they all put in a lot of work on a daily basis to ensure that our company does exactly what Raleigh had talked about, and that is provides excellent customer service. In this group, I continually ask them to engage and strive to exceed all the expectations that are out there. If you look at this group and you added up all the numbers that are up there, for the number of years of service, it's about 238 years. And that doesn't include all of the years that these individuals worked at other institutions. But the future is so bright with this group of talented individuals who are committed to be strong leaders and committed to our vision, committed to our core values, committed to ensuring that we are not like everybody else, that we don't follow everybody else, that we create our own path, and our path can be better than everybody around us. I'm proud to work with each and every one of them, and the opportunities for them are going to be far greater than what some of the opportunities were as some of us came up. So I think as this company continues to grow, they will have a lot of opportunity. They have the experience, the dedication, and the investment to ensure that this company continues to succeed. In the annual report, you saw a quote that I'm really proud of. It's talking about momentum. Every company wants it, but very few have the people and products necessary to realize it, or are willing to expend the effort and dedication required to make it a reality. As presented, the previous financial statements will attest First Bank Corp. Incorporated continue to build on a history of success by producing outstanding results in 2024 and is poised to carry that momentum into 2025 and beyond. I was sitting and I was looking at something today, and it was a quote that's out there. I'm not exactly sure who has it. I'm not going to take credit for it, but I do believe it. All you have to do to make all your dreams come true is outwork all of your competition. If you're willing to do the things that others won't do, you'll keep this momentum and you'll continue to build. But if you want to be a follower, you'll probably do okay, but you'll never do great. First Bank and Trust Company has always stood as a beacon of trust, innovation, strength among our peer banks. Nothing makes me happier than to hear one of our peer bankers talk about how much they admire the integrity and the build-out of First Bank and Trust Company. Today, as we look to the future, we reaffirm our commitment to not only meet expectations, but to exceed them. Our vision is bold, but grounded, to be the absolute best independent community bank in Virginia, Tennessee, North Carolina, and anywhere else that we decide to go, and to continue to remain headquartered in Southwest Virginia. This will be achieved by driving growth, not just for our company, but for the businesses, individuals, families, shareholders who rely on us daily. We are currently the 8th largest bank that remains in Virginia, with only 58 banks remaining in the great state of Virginia. A mere 25 years ago, there were 162 banks in Virginia. Our goal is to be the absolute last one. We want to outwork and we want to end up outlasting all of the others. And so we have a great foundation to do that, with financial stability and a leadership team to survive as an independent community bank. Enjoyment in life is not when everything is easy and going perfectly. Now, Mr. Dorton, who was a director here, always said I always look for the devil and everything, but I promise you that I look for a lot of good things. But when it's going easy, I'm not as very happy, I don't think. But many of the greatest joys are found confronting whatever challenges are out there and having a chance to make a difference. And all of our employees have a chance to make a difference every day. In this evolving world, our leadership team has a responsibility to confront the obstacles that are put before them. We must continue to anticipate change. We must adapt swiftly, and we must lead with integrity, innovation, and a relentless focus on creating shareholder value. I want to talk just a little bit about our communities. Banks play a tremendous role in the communities that we're in. I am proud to say that our employees live in the communities that they serve. We do not implant people into the communities that we go into. We're smart enough to know that if we hire the right people in a community, that we can do better than to try to hire someone and put in a community. So I'm really proud of how we approach the communities, but I'm most proud of when trouble comes, you find out what you're made of. And when Hurricane Helene came, our board stepped up first to put out $100,000 to get some people some help really quickly. So really proud of that. It was an annual report, and also our customers deposited between the employees and our customers put up about $35,000. And it was a tremendous thing for us to be able to do, but it wasn't just Hurricane Helene. We did it when the Greenbrier flood happened. We've done it over in Hurley. We've always tried to do what's right, even in places that we don't have a branch, that in communities that needed our help. So I'm really proud of how we step up, and a couple of our young bankers really did a lot to make that happen. Therefore, like our customers, First Bank and Trust Company will know and support our communities in the best and worst of times. We will maintain a long-term vision of the future through broad participation in the communities we serve. This realization will occur by having a deep understanding of the communities we serve with regards to residential, business trends, employment, amenities, lifestyles, community, culture, schools, education, and demographics. We will collaborate with elected officials who share our economic vision and are knowledgeable and progressive thinkers. We will seek to retain and create new and strategic community engagement activities. We will work together to overcome the challenges in communities, and we'll take advantage of opportunities that are in communities. In 2025, we're committed to expanding our Bridgewater office. We have a leased facility there. It's been a great facility for us, but we need more space there, and we've committed to lease additional space and expand that. That's been a really good area for our growth. Also, we plan on converting our Morristown, Tennessee loan production office into a full-service office. That office has done very well. It has over $50 million in loans, and it already has generated about $14 million in deposits that we have housed in our Johnson City office. We're really proud that we can continue to not only offer the digital services that we offer, but also to continue to build out our full service offices and give our customers a choice that you can go either way and we still can provide the world-class service. In 2025 and beyond, we'll work hard to know and understand our customers and the rich diversity of needs and lifestyles. We'll make every effort to provide our customers with what they need, not what we think they need. And we hope that we can make them aware of our products and services, which are world-class. We'll continue to provide the greatest possible value by delivering quality products and services. And I challenge you to take a look at our products and services. Eric's already challenged you to do business with us, to increase the wallet with the company that you own a part of. We'll continue to provide the greatest possible value by delivering the services that you need. And we'll do it all at a competitive price. That's what non-interest-bearing deposits that make up about 20% of our funding, that's what it does for us. It allows us to be able to have the margin that Eric talked about. That is what this company was built on originally, was free checking. We still have it today. We charge very little to our commercial customers, and we make our money loaning it out and getting paid back. So we really want to continue that. But I'd be remiss not to talk a little bit about our digital bank, which is run by our SVP over the digital bank, and he does a great job in all the technology that he has been able to put in place for our company over the last 8 years. But we're going to deploy fiscally responsible and sustainable technology to address the customer's needs and allow our customers to choose the method of banking they prefer. We're going to embrace the technology of banking as it is essential to serve our customers at the speed that our customers expect. We will work to ensure the technological innovation in theory is utilized to provide a positive customer experience. We don't want to just talk about it. We want to put it in place and make it work. And that's why we are such an efficient company. The bank customers' shift towards digital channels will be a part of our future. And I say a part of our future. The most common reason for switching banks has been the pursuit of better customer service, which includes the satisfaction of mobile banking and the ease of transactions. Therefore, it's essential that we embrace our enhancements to the mobile app and digital customer experience. I encourage each one of you as a shareholder to embrace the technology and to utilize our mobile apps. And I will even challenge you to tell me if you don't like it. I'll be glad to talk to you, or any of our leadership team would be glad to talk to you about how easy it is to utilize and all of the security features that we have put in place for you. It's amazing to me. I remember when we put in Open Anywhere into our app, that I went out and I opened an account up in less than about 3 minutes for me, and that's pretty good because I'm not the technology kid that a lot of people are. But you can go out and open up your own account safe and securely. Our customers can do it safely and securely with a lot of the backside protection that we have. But I challenge you to do that. I look forward to, and I'm available, and all of our staff is available to talk to you about our mobile technology, about our advancements in technology, and to talk to you about the security that we have put in place for these types of customer service. In 2025, we'll continue to leverage the technology and we'll improve the customer experience. We'll mitigate cybersecurity risks. We'll integrate new efficiencies for the bank. One that's really important to me that I've talked about last year, I talked about the year before, is the electronic storage of documents. We waste a lot of money, and I've got paper up here, and I hate paper, but there's a lot of money that's spent on individuals who work for you that lose the paper, that the paper is put somewhere somebody can't find it. So continuing to enhance our storage of documents, to manage our expenses. We've always been an efficient company. We're not going to quit being an efficient company, but we're also going to consistently expend the money we need to build our company for the future. And that's what we want, is a return on what we spend. And our CFO does a great job. He doesn't give himself enough credit for what he does. The bank's information technology initiatives will support the managed growth of the bank, including expanding our customer footprint safely and securely through our branch infrastructure and our digital bank initiative. We will focus on current technological standards to upgrade or replace systems and software to remain a highly competitive, safe, and secure financial institution. We renegotiated our contract with our core provider that gives us 7 years of enhanced technology, and we were able to negotiate a lot of that with Matt, our IT, the SVP over our IT, really leading that charge. We were able to negotiate that to minimize the cost of all those enhancements. That's really going to help our company as we move forward. And I applaud him for all the work that was put into that. We will also constantly strive to strengthen our in-person customer service capabilities. I know all of you that are running companies understand what I'm saying. It's hard to find people who want to work in the branches for us. It pains us deeply that we don't have the consistency that we want in our branches. But we're not alone. That's what COVID did to us. And we're continuing to rebuild. But we pay a fair rate. Last year we increased our paid time off for our employees at the lower end to be able to enhance and try to attract world-class individuals, because we cannot afford to lose that customer service capability. But we're also going to take advantage of the enhancements to things like our Visa check cards that provide additional benefits to our customers. And just a few of them. One of the ones that's coming out is our digital card access. We'll be able to issue a digital card to your wallet on your iPhone. It's going to be a great enhancement. It's going to be easy for our customers to use. It's going to be safe and secure. We're really looking forward to that. It's going to be really efficient for us. You know, if you've never used it, sometimes we like to give money to our customers. And you've got access to your rewards program. Take a look at our rewards program. Compare it to your credit card. Use that red card versus your credit card. You're all owners. Help us out there. We'd love for you to do that. Also, I mean, if you look out and anybody that's seen any articles about banking, understand there are a lot of bad actors out there trying to take over your accounts. There are bad actors out there trying to impersonate you. So I encourage you every day, if you want to look at it, your credit score is on that app, and it's free to you. So you can go out there and look. I encourage you to utilize our mobile app. I would be remiss not to give a little bit of time to our regions, and I want to do it I'm going to roll through this pretty quickly, but it's not because I don't want to give it more time, but I will tell you that I want to just bring out the fact that our Shenandoah Valley has a little over $1 billion in loans that they have created Just in the last year, they had a 9.3% increase in the loans under the real hard work of a young man who really has worked hard to build a team, John Bowers, that's world class. So I think we can feel really good about the $1 billion that is loaned in the Shenandoah Valley. Coming in second as far as the growth or as far as the dollar amount of outstandings is the Blue Ridge region. And Kelly Kendrick has done a great job there managing that region to continue to grow it with a 10.6 increase in loans, $946 million worth of outstandings as of the end of the year. You look at the Tri-Cities region, we have $473 million in outstanding loans, 11.2% increase. Hugh Ferguson has led that region for us and done a great job there. If you look at Southwest Virginia, I'd be remiss not to tell you that I'm really proud of that part. I'm proud of the fact that Brent Dyson has been able to grow our Southwest Virginia outstandings by 19.5%. $430 million in loans that, as Eric talked about the dollars that we pay in interest expense, think about $430 million of economic activity that we help generate and far greater than that with what is paid off during the year. So look at at that number as a real positive. And I already told you that I'm biased, so I'm going to talk about it. So if you look at the next region, which is our newest region, it's North Carolina. And I'm proud of the $269 million in loans that we've been able to facilitate. A majority of that is a credit to a young man named Bradley Webb that has worked so hard to work with those lenders to build the agriculture portfolio in a safe, sound, and secure manner in North Carolina. And he works tirelessly, sometimes probably more than he should, but I'm going to keep him doing it if I can. 34.5% increase. But none of that would be positive. Eric talked about our deposits. I am extremely proud of the fact that we're not on rate boards. We're not out generating our deposits by paying up for them somewhere else. Our deposits, 82% of them are from individuals and businesses in our markets. The other 18% are from public depositories in our markets. And I'm extremely proud of Southwest Virginia. I'll round it up to $1.2 billion in deposits in Southwest Virginia. That is amazing with 6 offices. 16.55% increase over last year. We asked for deposit growth and we received it. If you look at the Shenandoah Valley, and we have worked so hard that our goal is that each of our regions fund themselves. You can look at $904 million in deposits in the Shenandoah Valley, a 20.56% increase. So not only did John keep the ball rolling on the loan side, but he understood the need for our deposits, and he delivered once again with his team. In the Tri-Cities region, $648 million of deposits, 18.79% year over year. What a tremendous continued path forward. The Blue Ridge region, again, under Kelly Kendrick's leadership and utilizing Sophie Chafin Vance to really take charge over all of our in-branch offices. It's really helped us to continue to build and a 17.74% increase, $581 million. And even our 2 offices down in eastern North Carolina have grown to $53 million in deposits, a 69% increase. So I think everybody out there understands that we want to grow our deposits and we want to grow non-interest deposits because that's what helps us to build our margin. But let's not forget the other divisions in our company. We have the agriculture division. All of these loans are a part of the other regions because that's how we operate. But there are $916.3 million in loans for agriculture, a 13.47% increase over the prior year. And agriculture has been a niche play for us. There's about 28% of our loans that are in agriculture-related products. And Raleigh talked about it. We want the whole enchilada when we're talking about agriculture loans. We want the operating accounts, we want the operating lines of credit, and we want to continue to facilitate this lending. What I'm most proud about here is the fact that we have credit enhancements on a lot of these credits. And I'm not talking about just FSA. I'm not talking about SBA only. I'm talking about whole farm insurance, crop insurance, and other things that help us to be able to ensure the ability for our individuals to pay us back. So really, that has been a tremendous asset to us. And I would be remiss not to talk about our mortgage division. Everybody here knows that interest rates have rose rapidly. Eric talked about the changes in interest rates. It became very difficult, but I am extremely proud of Andy Puckett's leadership. And his predecessor, Rick Buchanan, have always never given up. No matter what the obstacles that were laid in front of them, they were able to overcome them. And Andy did it once again by going out and creating in-house products that were competitive and safe and sound, that we could compete for the loan at that point in time, and then have the opportunity when rates do drop. And I do believe Eric's right. I'll never forecast them right, but they will eventually go down. And when they do, we'll have the opportunity to refinance those loans and to be able to sell them in the secondary market. But I'm extremely proud of what he was able to do with his team to build our mortgage loans with a 21.3% increase overall. And lastly, I talk about it a lot, but our trust and wealth area, it's a small group of people that do a whole lot of work for this company. And they have about $635 million in assets assets in custody. And I will tell you, this isn't on our balance sheet. So if you really want to know the size of this company, take the $3.9 billion that we are today, add in $620 million of secondary market loans that we service 100%, and then add in $600 million that we have in our trust division that we manage, and our company's just a little bit larger than $3.9 billion. So I've always tried to keep that in my mind. But I want to talk a little bit too. I know you're all here because you're owners of this company, and I would be remiss not to talk a little bit about our company stock. And the president and CEO, which I have the true pleasure of being, and I value it every day, governed by the board of director policies, has a fiduciary responsibility to the bank's shareholders and an obligation to create and grow shareholder value. As this bank's president and CEO, it's my responsibility to plan, implement, and integrate the long-term and short-term strategies that are established by your board of directors to increase shareholder value. And here I want to thank all of the board for all that they have and continue to do to help ensure the shareholder value that all of us have the opportunity to benefit from. But as you will note from the slide, the last shares sold for our company, and I want to remind everybody that our stock trades independently between shareholders. We are not a publicly traded company, thank goodness. And our shares trade directly between individuals that want to sell the stock and individuals that want to buy it. We are not on rate boards here either. We're not out there, and our company does not make a market in the stock. But I am proud to tell you that the shares that become available, there are individuals that want to buy them. We have been blessed with people who want to be a part of our company. We have about 1,268 shareholders. But if you look at this slide, you know, I wish I'd have invested $1,000 in 1979. But if I had, I would have purchased 50 shares of this company. With the 8 splits that have occurred, that 50 shares would be 12,800 shares today. Just for representation purposes, because it trades at whatever the shareholder wants to sell it for. But for representation purposes, if you looked at that at $62 a share, that would be worth $793,600. What a real tribute. But I will tell you, and I believe this, I believe the best is yet to come for this company. I believe that the leadership and the employee base that this company has, the markets that we're in, that the best is still yet to come for this company. If we continue to stay grounded, never believe we're big, believe that we are one customer away from being out of business, that we have to treat everybody with a great deal of respect. This year we've already paid out, the board of directors has approved, and it's been paid out $10.4 million to our shareholders. The year-to-date dividend of 63 cents a share. But keep in mind, the year's not over. We've always had a couple more dividends if the board elects to do it. And if the board elects to do it, that dividend will be approximately $1.30 a share. That's what our budget is. That will be up from $1.19 a share, or 9%. You're going to hear a lot about 9%. I don't know what it is, but we kind of like 9%. But I do think that here you can see that our stock appreciation over the last 5 years has been around 65%. I will tell you, just from last year, when I was standing here last year, that our stock was trading at about $112 a share. That was before the split. That reduced back to half because you got twice as many shares. So it went to $56 a share. So if you just look at the previous slide and you see that the last trade was at $62 a share, if you take those two numbers, subtract it, you'll get $6. Divide that into $56 and it's a 10.7% growth. So not bad for a great company. If you look here, also there's been a 107% increase in dividends paid over the last 5 years. It's remarkable. We have continued to reward our loyal shareholders. But, you can't do anything about the past. Okay, I can talk about it. I kind of like it sometimes because it makes me feel good. But really, it's what we're going to do tomorrow that really counts. And that's what you as shareholders should expect out of us. And what we're going to do in 2025 is our goal is to grow our loans by $350 million. You might look back and say, my lands, that's less than what you did last year. Well, sometimes you got to take a little breath. And you got to make sure that you have enough capital to ensure that you're safe and secure as you're growing. So $350 million would be a great year for us. But we also want to grow our deposits by $350 million. And I didn't say, overall, our asset growth would be right at $400 million because with our equity growth and other things. But the deposit growth, we want to mirror our deposit growth and our loan growth. That is how we can maintain the margin that Eric talked about. We can't go out there and pay up for all of our money. We've got to continue to build our non-interest bearing deposit base. But if we do it, and if we're able to earn we believe that in 2024, we will earn somewhere around $60.3 million. Think about that for a minute. $60.3 million. That's investing money and making sure that we take care of the things for the future. We're not being frugal just to earn for 1 year. That's a $4.9 million increase over our 2024 income, which equates to, unbelievably, about 9%. If you look at our earnings per share, it's projected to be $3.63 a share, and that's an approximate 9% increase. So I think we have you saw through the month of March where we're at. We're on target to meet or exceed all of our goals. Will it happen? I don't know. If I had a crystal ball and I knew what was going to happen in the economy and I had my way about it, rates would be reducing in the next 2 months, the secondary market would be on fire and we'd make a lot of money in it. But I doubt that I'm going to get what I wanted there, but I'd like to have it. But not only looking at 2025, it's great to look 1 year out, but I will tell you, and Eric reminds me of it quite often, that we've probably set up what we're going to do for 25. We know what we've got for 25. We've got it pretty much aligned unless something comes out of the woodwork. But this company has always had a 5-year plan. It's been there for the time that I've been here, since 1998. And prior to that, I know Bill had a vision that he put out there every year. And it wasn't just the next year. It was, what can we do out there in 5 years? Well, this year, Eric decided he wanted to go 6 years. So he's taking it all the way to 2030. And we're really proud of what our vision is that in 2030, and I got to get this right this year because I said something last year that somebody reminded me of the earnings per share that they thought it was going to be 2024, but I'm going to get this right. Grow assets to $6.6 billion at the end of December 2030 from our $3.9 billion, to grow our income to $94.9 million for the year 2030. So think about that for a second. That's about 34 million more than we'll earn in 2025. That's not taken away from the fact that we're investing and we're going to continue to grow. That's reinvesting money and being able to do it. We believe that the shareholders need to be rewarded, and we believe in 2030 that we will be able to have the capital to be able to pay dividends of approximately $2 a share. So think about that for a minute, going from $1.30 to $2 a share. Tremendous continued managed growth. If you look at earnings per share at $5.72 a share. But the vision I've outlined requires the implementation of an aggressive strategic plan. I could stand up here and tell you numbers all day long because I like them. But without a strategic plan, they're just numbers. But I will tell you that if you look back at the history of this company, we have always exceeded what our 5-year plan was. There's not a period in time that we didn't exceed it. And I know that Bill always set aggressive targets. We weren't sandbagging just to meet something. We were trying to challenge ourselves to be able to do it. So a lot of that goes to his vision as he grew through it. But with the strategy, much of what we need to put in place to be able to meet our vision is already there. And it's within our reach to get to what we're doing. Our goals are attainable because we're dedicated to First Bank and Trust Company's strategic mission, as well as the core values that brought us where we are today. We have a loyal customer base, loyal shareholders, and a skilled and dedicated team of professionals and staff throughout our footprint, supported by a knowledgeable and invested board who are committed to carrying the bank forward. You've heard it a lot from us. Eric spoke so eloquently about the fact that to remain independent, we have to work for it. It's not a given. And we've got to continue to see that, and we've got to continue to strive to do all we can to ensure the future for every single stakeholder we've got. Whether it's the largest stakeholder we've got or the smallest stakeholder we've got. Again, I believe that you've got to take care of everybody, not just one person or one group of individuals. It is, the next thing I want to do is a great pleasure for me. He don't know it's coming, but you know, Eric has worked hard, and he's hung with me for many years, and it probably was one of the best moments of my life when he was elected to the board of directors of the bank, because the young man has never turned his back on me. He's probably done things that he said, God, he's crazy. He's lost his mind. Somehow most of them turned out okay, but he's hung with me, and I want everybody here to give him a big, tremendous applause for not only what he does as the chief financial officer of this company, but as a director of the First Bank and Trust Board. And before I get fired, I'm going to thank the whole board too. So give them a big round of applause too. I'm about done, and I'm sure you've heard all you wanted to hear out of me, but I've got two more things. One is our strategy moving forward. You heard from Eric and the others. Mine's pretty simple. You've heard it. I hope we've said it 100 times tonight. Exceptional customer service. Never forgetting that we need to take care of our physical locations and the technology to exceed customer expectations. I'm never going to stand here and apologize for profitable growth. I'm never going to apologize that this company is profitable, because that's what we want to be. And that's what we have to be to have long-term shareholder value. I agree. I mean, I really believe that growth is the way to prosperity. I want us to continue to push ourselves for strategic expansion where our model works, to be able to find not only new markets, but to understand that in our existing markets, we have less than 50% market share in most every market that we're in, except our legacy markets in Lebanon, Virginia, and here in Southwest Virginia. In all of those areas, we do have a higher market share. But we've got opportunity to continue to grow where we are. I know for me, my next new shiny toy is what I like the most, but sometimes I need to rub on the old ones. And I think that's what we've got to do, is to continue to strategically look for places to expand. I talked about hiring to retire. I really believe in it. I hope that this leadership team, I hope that I live long enough to see what all they accomplish, because I think it'll be tremendous if they stick together. If they're willing to take on the hard work, if they're willing to make their dreams come true by outworking their competition. Innovate and secure thinking. Embrace new ideas. You know, I don't like them too much. Most people tell you that my first answer is usually no. I won't do that. But improves the efficiency and it protects and to protect the integrity of the customer data. I couldn't talk about that more. But in the end, I'll tell you what I really want. I want everybody in this room and everybody that's listening to this to deepen their relationship with our company. If you don't have your accounts with us, Eric talked about it earlier, I want you to think long and hard about that. You're an owner of this company. And I'll challenge you one more time to tell me why you don't want to do business with us, either checking accounts, loan side, or whatever's out there. If you're not doing it today, think long and hard about you really like us as a shareholder, so love us even more as a company and do other business with us. And I'm going to tell you, I've never asked for anything that I didn't give something back. Sometimes I don't give very much. But I'll tell you, everybody that's listening to this and everybody in this room can earn $500. And I'm going to challenge every one of you. I know you probably have a lot more friends than I've got. I might have 5. But all I need for you to do is find 10. 10 each. And there's about 150 people in this room. That'd be 1,500 new deposit accounts if I can get it done. So I'm challenging every one of you as shareholders to take part in our refer a friend. Right now it's out there. You can scan the QR code, or you can go to our website. You can use our mobile app to get to it, or by golly, you can call me and tell me who your friends are, and I'll make sure you get the credit for it. So I want you to do it. I'm asking you to do it, and I'm asking you to deepen your relationship with our company. And you can earn up to $500, and I will tell you the reason it's $500 is because it's under the threshold for the 1099 reporting, and we didn't want to do that. So, you know, being the kind of efficient person we are, we're going to make sure. And by the way, not only are you going to get $500, but your friend is going to get $500 or get $50 per friend. Let me get that right. I'll get in real trouble there. But they'll get $50 a friend, and there is a couple things they've got to do. They've got to either do a direct deposit with us, or they've got to do some transactions through other means with us. So we want people who want to do business with us. We don't want it to be a gimmick. We want it to be something that is supported, and I really hope that part of you will do it. I just hope a few of you will do it. But we can all make this work, and I will tell you, Eric reminds me a lot of times when I am not in the best of moods or am not believing things are going to go the way we need them to go, that the one thing that we've always done is when we've asked for something, our customers, our employees, and our shareholders have done it. So that's what I'm asking you tonight, is to try to help us build our non-interest bearing deposits, maintain our margin, and continue to ensure that this company is better than every other bank out there. And I'm biased, and I would tell you today that I believe that with every piece that I've got, is that it is the best company. And last year I didn't do a very good job at the end, but I will tell you, I love working here so much that I'm just not ready to give it up. So I hope that the board will keep me around for a little bit longer, and I hope I get the opportunity to run this company and see some of the things that we will accomplish. But I didn't do very well last year with it because I was mad and I was upset. But this year I'm a whole new person, I hope. And success makes you a lot better. So everybody, Ronnie, I think you've got some more business, and I hope that also my last thing is, if I've not spoken to you, it wasn't by design. I hope I've spoken to every shareholder that's in here, and if I haven't, I hope I get the opportunity to before you leave here today. Thank you.
Thank you, Mark. This time, I'd like to ask the canvassing committee to report if a quorum is represented.
I'd like to report that there are 13,135,099 shares represented at this meeting. Of those, 8,164,229 shares are represented by proxy, and 4,970,870 shares are represented in person. There is a total of 16,597,652 shares outstanding. So that gives us a total percentage of 79.14% of shares voted at this meeting.
Thank you, Eric. That number would declare that a quorum is indeed present, and this meeting is duly in session. In accordance to Article 4 of the Articles of Incorporation, stockholders will vote to elect directors of First Bancorp for staggered terms. Directors under First Bancorp Incorporated are designated as a Class A, B, and C director. Class B directors, whose term expires April of 2025, are as follows: Ronald L. Barrett, William H. Hyder, and David A. Leonard II. At this time, I'd call for nominations to fill the vacancies created by the three expiring terms.
Mr. Chairman, I make the motion to elect Ronald L. Barrett, William H. Hyder, and David A. Leonard II to fill the vacancies created by the expiring terms.
Motion made and properly seconded. All in favor? Any opposed? This time, I would request a motion to fix the number of directors to serve First Bancorp, fixed to 9 for the existing year. Okay. Okay. Motion made and seconded. Any discussion? All in favor? Any opposed? If no other business is to come before the meeting, I would then ask for a motion to approve the acts of the directors and officers during the past year. Motion made and properly seconded. All in favor? Any opposed? Again, I'd like to thank everyone for spending the time with us this afternoon, and I wish everyone safe travels home. I'd also like to ask all directors elected to meet following this adjournment at the Corporate Center to continue the meeting. This time, I'd like to ask for a motion to adjourn. All in favor? Good night, everyone, and thank you for being here.